let's look at the Australian versus the Canadian dollar. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So let's get a bit of a recap of what's been going on so far this week. And yeah, we do see that energy is still the top performing sector, and the quote-unquote worst performing is utilities, but generally speaking we do tend to see much smaller moves from the utilities. The benefits with the utilities sector is that we do get that nice dividend and much lower volatility than certainly what we have seen recently in energy. Looking here at the megatrends, we still have a very massive outperformance vis-a-vis the S&P 500. In a pretty darn big way. Blockchain, notwithstanding the huge haircut, minus 55-ish% here from the highs, we still see that it is the top performing megatrend. Other, very high performing megatrends are interactive entertainment, pretty huge. We do see Alzheimer's, that portfolio is really performing well. And you also have biohacking, 632% here from the low. Yes, so let's go to the pair. So you have, we are basically at the 52-week lows, minus 7% away here from the 52-week highs. So we have clearly seen a bit of a pullback. But that can of course open up some interesting opportunities. As far as time cycles go, it does have a tendency to move in a cyclical nature, but the time cycles, they have differed, however, in duration. We see there certainly is something going on with cycles. The interesting thing with that is that it is very well suited for swing trading. You can be long, you can be short, long, short, long, short, long, short. So this pair works pretty well as a part of a market neutral portfolio. When we look here at the most recent developments, and the reason why this one popped up on my radar is to do with the dark blue 100-week moving average. It's not been a perfect support level in the past. You see that the moving average and the price, they tend to have a more of a gravitational effect on each other. But you see that there is a tendency to have price interaction. Here you see a bit more surgical as resistance here and here. So clearly this is a moving average that matters. We are currently very vigorously testing support here. And we do have what looks a lot like a head and shoulders pattern in development. A head and shoulders, it tends to have a right shoulder, of course, and a development of a right shoulder would mean that there is the expectation that we are going to see a bit of a rally, which makes sense given that we have tested support. RSI is in a lower region that tends to trigger some buying, at least historically. Here we see a rally. Here we see some rally from this kind of RSI level. We could have something like this where we do have a breakdown. So if we were to lose this support level, then we certainly could see a sharp pullback and much lower RSI. So the bulls certainly need to use this as an opportunity, but so far this looks like something that could become temporary support and trigger a bit of a rally. The problem, however, for the rally is that you have the red 200-week moving average, which has been a very solid resistance level. Resistance. So basically it's a moving average that really matters. So that is likely going to create some problems for the bulls. But at least my primary thesis here is that we are going to see a bit of a rally. Here we have the daily data points. So basically a very much more nuanced picture of what we just saw. So it took 215 days to form the left shoulder. Around a similar time frame to form the head, 227 days. So based on that, we could guesstimate that if there is symmetry, and so far there's been some symmetry here, we could see 215-ish days take to form the right shoulder, which means that we would likely peak around the middle of that time frame, or maybe around late September-ish. That at least is a projection. This shoulder, however, would reach completion early next year. But of course, these are just projections. So when we look here at the seasonality for this pair, so here you have the last, like this, you have the last 10 years, the last 20 years. So you see that there's a general and relatively consistent pattern. So we do see that June, July tends to be, well, at least July has a tendency to be strong, which is, the month that is beginning today. So there is the expectation here from a seasonality perspective, on top of, the moving average support, that we could see some upside. The problem is that August is weak, but then we do have September, October, where you have some strength, and that is something that does fit with what we could project based on the formation of that right shoulder, because then you would expect, some rally, but then, a pullback, because that is how shoulders are formed. You have this general pattern. So there is an interesting match here between what we could assume based on the head and shoulders pattern and also the seasonality. So that is certainly interesting. So yeah. So if I were to sum up my take here, I think that we could make a speculative temporary bullish thesis that is purely contingent on us just forming that right shoulder. If we do lose the blue 100-week moving average support this week, slicing below it and closing below it, that increases the odds that we could see a sharper sell-off. So basically, we will have a meaningful move. The direction is a bit indetermined, not determined yet, but currently the setup favors a more bullish take. But obviously a head and shoulders pattern is not long-term bullish. So let's quickly compare Australia with Canada, the two countries. So yeah, let's go a bit further down. So here you can see the industries. Here you have mining, industrial and transportation equipment, food processing, chemicals, steel. Similarly here as well, in transportation equipment, chemicals, processed. However, here you have quite a few additional industries: food products, wood and paper products, fish products, petroleum, natural gas. As far as agricultural products, we have also here a longer list for Canada. Exports, commodities, yeah. So yeah, there certainly are some differences here when it comes to export partners. China is, you see that there's a much broader mix here for Australia, but of course due to, this mix makes a lot of sense when you consider the basic geography. These are neighbors, and not a huge surprise that Canada does a lot of business with America. It is interesting that China is the second one, but there's a huge difference when it comes to import partners. Yeah, see something similar to what we saw with export partners, which is not like a huge surprise given that is how business works. But yeah, I think that this is an interesting pair. We do have an interesting technical setup that is likely to produce some interesting moves. Whatever you do, of course, you want to have an exit plan whenever you enter any new position.